If you are concerned that your low credit score will affect your mortgage application, in this video we're going to look at some top tips on how to improve your credit. It's really important that we monitor our credit on an ongoing basis. There are three main credit reference agencies that lenders use: Experian, Equifax and TransUnion.
It's important that all three credit referencing agencies are monitored. Aaron's going to explain why.
So when you apply for a mortgage, a lender normally uses either a combination of 1, 2 or 3 of those credit reference agencies. So being able to monitor all three will give you the best chances of obtaining a mortgage.
The easiest way to monitor all three credit referencing agencies is by signing up for Check My File. Check My File will have a combination of all three credit reports on there, so you can see exactly what the lender will potentially see.
So let's look at the reasons why you may have a low credit score. The first thing could be that you've got some adverse credit in the background, and that could be things such as defaults, CCJs, bankruptcies, or even a late payment. It may be that you've just turned 18 and don't actually have a credit score at the moment because you haven't had any credit before. It could also be that you've got high utilisation of credit. That basically means that you've got high balances on credit cards, loans, and have a number of different credit sources which you are fully utilising.
Now, if there are CCJs and defaults on your credit profile still outstanding, our recommendation will be get them satisfied. As soon as some CCJs and defaults are satisfied, you will start noticing an improvement in your credit score.
So we would also suggest that you get registered on the electoral roll. Once you get registered on the electoral roll, a lender has a clear trail of your previous and your current address history, and that makes it easier for the lender to be able to see what credit you've had previously and currently.
If you have large credit limits on your credit cards that you're not actually utilising at all, a lender potentially will class you as high risk due to the level of credit access you've got available. Our recommendation would be close them credit cards down. You will notice a gradual improvement in your credit score.
You may also have high balances on a number of credit cards. Once you exceed 30% of the available credit limit, that can have an impact on your overall credit score. So our recommendation would be that you clear some of those balances down, and as soon as you get below 30%, you should see an improvement in your credit score.
If you've never taken out any credit borrowing before, that can also impact your score. Our suggestion would be take out a small credit card, use it, but pay it off at the end of the month so you don't incur any interest charges. That will mean that your credit score can potentially improve.
Also, if you've recently split from your partner, we would advise separating your finances as soon as possible. So you may have a mortgage, you may have a loan, current accounts. Those sorts of things are classed as joint borrowings, and if your partner has bad debt associated with them, that can also impact your credit score. If you approach the credit reference agencies and ask for a disassociation form, they will be able to remove your partner from your credit file.
Having multiple credit searches done in a short space of time can also have an impact on your credit score. Now, we would recommend that you avoid having hard searches done. Having hard searches done on multiple occasions in such a short space of time will have a derogatory effect on your credit score. Soft searches are okay. So for example, if you go to a comparison website to renew your car insurance or your home insurance, they will carry out a soft search on your credit file. That's okay, but avoid hard searches where possible.
So there's some great tips there on how to improve your credit.
Please check out other videos around how to get a mortgage with bad credit.